Today, the American jobs recovery seems to slow as the Labor Department reports only about 260,000 jobs were added in April. Peloton shares tumbled after the company announced recall of its treadmills over safety issues, but investors are still keeping the faith. Why is the company remaining strong? One of the world's biggest investment banks is getting involved with the crypto business officially. That and much more coming up in NTD Business. Good evening. Great to have you with us. A big miss with the jobs report today. America added far fewer jobs than expected last month. Just 266,000 according to the Labor Department, as compared to 770,000 in March. And it comes despite a record number of job openings in the country. So businesses are obviously looking to find workers. Many parents are still at home with kids while schools are closed, that's true. And some people are still afraid to go back to work. But others could be staying home to qualify for enhanced unemployment benefits. The U.S. Chamber of Commerce thinks that's what's happening and wants the government to stop paying people the extra $300 per week. The support was extended as part of the last stimulus bill and is set to run out in September. And one surprising figure from the report is the number of retail jobs fell by 15,000. That's despite all the stimulus and consumer spending. Ask Joseph Trevisani, senior analyst at Eviction, what it tells us.
Well, I think two things. One, that the internet is becoming a behemoth, which is swallowing many, many retail jobs. I think that's the case. But there's also something else specifically related to the lockdowns and the year that we've had. And that many retail establishments are still on the edge or failing because they have not recovered. After a year of low traffic and low consumer participation in retail stores that are on the street, in brick and mortar stores, many stores are just giving up because it's simply not enough so far in the recovery. So I think you're going to see that. That's one of the things that's keeping the initial jobless claims number relatively high and relatively slow to come down, is that firms, small stores which have hung on for a year, 13 months, are giving up simply because they don't have the traffic and they don't see the improvement coming sufficient to keep them in business.
Another interesting point as well that I noticed was, I think coming up to the report, everybody was expecting the average hourly wage in the private sector to actually fall as these lower income earners started to come back in hospitality, food, et cetera, but it actually went up. The average hourly wage went up. You think there's inflationary reasons for this, or what do you put it down to?
Well, I mean, the standard economic response to scarcity of labor, if you're looking for work, is to raise wages. Which brings up another point, I think, which is going to become increasingly active is from the market's point of view, how is wage inflation going to factor into the overall inflation? The Fed has said for weeks, actually for months, and there's a good argument for this, that the increase in inflation rates that we're seeing is a base effect rate. And there's no doubt that a lot of that is true. But it's also true that we're seeing very strong increases in commodity prices. Consumer demand is strong. And if you add wage inflation, wage increases demanded or necessitated by the scarcity of labor, at least people not going to work, you have a real argument for a base increase, meaning that the base rate of inflation is increasing, not simply something that's a comparison to last year's rate. And that is something that I think the Fed is going to have to deal with.
So what do you think from a policy perspective, either on the Fed side or on the government side or elsewhere? Do we need to do anything, or this is part of the path to recovery?
The Fed has painted itself, I think, into a bit of a corner with its focus on the labor market and on unemployment. Because we have seen, and we're looking at it right now, that there may be factors involved in the changes in the labor market that are not amenable to rate manipulation, to what the Fed does to try and support the economy. These are fiscal measures. These are measures that come from the government. If there is an aspect of this which is fostered by unemployment insurance and the continuation and the rates of it, then that's not something that the Fed has anything to do with. Those are policy decisions out of Washington, fiscal decisions. So if that is the case, then the Fed's maintenance of rates at this level may end up actually being detrimental if inflation starts to assert itself. And that, I think, is a concern that the Fed is going to have a hard time addressing, considering the way they've approached this entire problem with the pandemic and as much as they've discounted inflation.
Joseph Trevisani, FX Street. And the Treasury Department is providing another $21 billion to help people pay their rent. It says new rules mean local agencies can now give aid directly to renters, and the renters can still get the aid even if landlords don't participate in the program. And if landlords don't participate, renters don't need to wait as long anymore to get the funds. The Treasury's announcement follows a federal court ruling on Wednesday that threw out the CDC's eviction moratorium that blocked renters from being evicted nationwide. And that court's decision left many landlords wondering what this means for them. NTD's Steve Lance has the story from Washington, D.C.
Basically what that means is that states can operate their eviction courts, because the way the moratorium works is it says that states are not allowed to operate under their own laws, under the laws that are on the books. And now they are allowed to do that, at least temporarily.
Caleb Kruckenberg, attorney with the New Civil Liberties Alliance, said that the moratorium is still technically in effect because the judge issued a stay in her order.
And what that means is while the government is appealing, her decision isn't effective. So actually, as we sit here today, the eviction moratorium is still ongoing.
We had a chance to speak with Paul Howard, president of the Florida Landlord Network, who says that many of his members are small landlords who only own one or two properties. He told us about one member who is a maintenance man that relies on his rental income to survive.
In his case, he doesn't have money like that to throw away. And oh, by the way, the mortgage has got to be paid, and the lights have got to stay on in his name. The repairs have got to be made.
Mr. Howard told us that he doesn't think it's right for the government to force the burden onto the landlord.
I think if the government is going to shut down restaurants and bars and other places and put people out of work, they probably should cough up the money for the rent, not the landlord.
Ultimately, attorney Kruckenberg, who I spoke with in our interview, told us that this matter will have to be solved in the courts, but that this is a step in the right direction for those landlords who have been affected by the moratorium. Steve Lance, NTD News, Washington, D.C.
As Joseph Trevisani mentioned earlier, commodity prices are going through the roof. A steel shortage has driven the price almost 3 times higher. One industry insider told me when the price crashed last year at the beginning of the pandemic, China bought up all the scrap steel that's used to make inexpensive steel. So now there's no way to make cheap steel in the US. And since Biden didn't lift the China steel tariffs, there's no way to import cheap steel either. But US steel stocks did benefit. They crashed to a record low last March, but skyrocketed 200% in just 12 months. Nucor spiked 76% this year. Other areas that are also seeing shortages include computer chips, lumber, and chlorine. But more record highs on Wall Street, even after the disappointing jobs number. The Dow rose 229 points, about 2/3%, reaching an all-time high. S&P 500 gained 31 points, 0.74%. The Nasdaq was up 119 points, 0.88%. The weak jobs report might have eased some concerns about the Fed potentially raising interest rates, which some investors worry would hurt growth companies with high valuations. Also, a raft of upbeat earnings helped stocks. S&P 500 earnings now estimated to have increased 50% in the first quarter from last year, and to be the highest growth rate more than a decade. Gold today jumped again, its highest level since February, now at about $1,830. And treadmill maker Peloton shares never really recovered from the news it's recalling over 100,000 units over safety fears. It's up a little today, but still down almost 15% for the week. But investors are still keeping the faith. and Evelyn Lee has the details.
Peloton estimates about a $165 million hit to current quarter revenue because of the recall of its treadmills.
And that assumes roughly 10% of the existing treads will be returned, which I believe is going to be a conservative number.
After one child died and 70 others were injured in accidents tied to Peloton's treadmills, the company recalled both its Tread Plus and Tread treadmills. Shares tumbled about 15% on Wednesday after the company announced the recall. But it climbed up again when investors realized that the impact from the treadmill recall isn't as bad as expected. Chris Wong says that might be because Peloton's flagship product is a different one.
But overall, the bike is really the predominant part of sales. It's like 85% of product sales. The treadmill is a lesser product for them.
And demand for its high-end cycles still remains strong despite people returning to the gym. Barclays analyst Mario Lu says the recall will hit financials in the short term, but is a prudent decision in the long term. And Wong agrees.
Overall, this will just push back the treadmill sales a couple quarters, and I think they'll be back on track. And people that are looking for a great workout at home, they're going to be looking at Peloton.
The company is now laying out steps to improve the safety of the equipment. They're working with the U.S. Consumer Product Safety Commission to build an extra layer of safety features for the Tread Plus. That includes a digital passcode to protect against unauthorized use. The Tread, which was scheduled to launch at the end of May, is delayed to add safety features as well. But Peloton CEO says it could go on sale as early as July. The company still plans to launch in Australia later this year, and it's ramping up marketing spending to try to reach new customers. Evelyn Lee, NTD News.
Media conglomerate News Corp just beat analyst estimates for the first quarter too. It's thanks in large part to digital services. Its real estate, digital news and book publishing segments are also doing well. And NTD's Colin Fredrickson breaks it down.
News Corp, yet another company beating analyst estimates. The media conglomerate posted third quarter revenues of $2.34 billion, defeating expectations of $2.19 billion.
Patently, the strategy of simplifying the asset mix, the vigorous pursuit of digitization, the disciplined cost reductions, and the investment focus on three growth areas, digital real estate, Dow Jones, and book publishing, have proven to be particularly fruitful.
And the vigorous pursuit of digitization is paying off well. While the print version of the Wall Street Journal has declined, digital-only subscriptions rose 29% to over 2.6 million.
People are traveling less, they're not going out as much, but they still want to consume and interact with information. And when it comes to something like News Corp, they have that data, they have that information already.
Print advertising was weak, and several community newspapers in Australia shut down. News Corp announced last year it's closing its Bronx print plant and will outsource those operations.
Advertisers are not seeing the results in print media anymore that they used to see in 10, 20, 30 years ago. And so advertisers are not putting their ads inside print as much either.
Their digital real estate services grew 34% year over year, making up 15% of total revenue. March alone saw a 60% increase in users, now at 100 million.
The digital real estate sector is one with both a large addressable markets and a significant scope for digital disruption. Investors should be looking at that area because it has been such a growth area.
The company calls HarperCollins Publishers, their book publishing segment, another engine of growth, with a 19% year-over-year increase in revenue. It points to standout titles such as the Bridgerton series, Cicely Tyson's Just As I Am, and The Boy, the Mole, the Fox House, and the Horse. Colin Fredrickson, NTD News.
And German sportswear company Adidas is feeling increasingly positive about 2021. It expects second quarter sales to jump around 50%. It's also raising its sales forecast for the entire year, expecting growth in the high teens. It also doesn't seem too worried about calls to boycott the company in China, thinks it'll just blow over. Adidas came under pressure there after expressing concerns about human rights abuses. It did initially see a steep drop in demand, but sales have since recovered. The company also expects to see a boost from big sports events like the Olympics and the European Soccer Championships. And Ford and BMW are leading a $130 million investment in a small Colorado battery startup. Ford says it's part of the race to increase range and cut costs for the next generation of electric batteries. NTD's Jasmina Davis has the story.
Ford is investing in a new type of battery used in electric vehicles. Together with German automaker BMW, they're leading a $130 million funding round in a battery startup called Solid Power. The Denver area firm is developing affordable but powerful rechargeable batteries, which are called solid state.
There's so much interest in solid state because of the promise of much higher levels of energy density.
Solid state batteries can store more energy than lithium-ion ones. That means smaller batteries and more range.
That allows the vehicles to become lighter for the same range, as well as more space for people and their things instead of for batteries.
Tang says the company will allow Ford to either reduce battery size and cut costs in some models, or keep the same size and get more range in others.
We haven't made that determination of how we would do it, but we're seeing roughly 25 to 30% improvement in energy density.
Solid-state batteries are lighter and have a lower risk of fire, but they're also more expensive and still in the early stage of development. Car makers are racing to develop electric vehicles amid tightening emission standards. Ford has said it will invest $22 billion in electrification through 2025. Jasmina Davis, NTD News.
And Germany's largest and most powerful union is eyeing Tesla's new factory in Berlin. It says it wants to team up with employees there when the factory opens later this year. NTD's Patrick Hayden takes a look.
Germany's largest and most powerful union, IG Metall, wants to set up a works council at Tesla's Gigafactory near Berlin. The factory is due to open later this year, as red tape delayed its April opening. The union head for IG Metall, Joerg Hoffmann, says so far he hasn't been in contact with Elon Musk. He says Tesla is joining the land of co-determination and collective bargaining agreements. Unions have significant say on strategic matters in the country. Business Insider recently reported that German authorities are probing possible violations of labor laws at Tesla's Grünheide site. Tesla was not immediately available for comment. Hoffmann did welcome Tesla to Germany, saying it's the first big investment in a new factory in the automotive sector since the turn of the millennium. He also said Germany's car industry is facing an employment fiasco unless it gets investment in new technologies, especially batteries. Patrick Hayden, NTD News, London.
And Goldman Sachs is forming a new trading desk for cryptocurrency. It's the first time the bank's gotten involved. NTD's Phil Zoe has the details.
Goldman Sachs is officially kicking off cryptocurrency trading business on Wall Street. The bank told its workers Thursday that a newly created crypto desk has successfully traded two kinds of Bitcoin derivatives. That's according to a Goldman Sachs internal letter obtained by CNBC, titled Formation of Cryptocurrency Trading Team. The crypto team is within Goldman's Global Currencies and Emerging Markets division and is part of its digital assets effort. The letter is the first time Goldman has officially recognized getting involved with crypto trading. It already launched a new digital assets dashboard that provides crypto prices and news to clients. So far, Goldman has traded Bitcoin futures and non-deliverable forwards, which is a way to wager on the price of Bitcoin. The contracts are settled in cash, so the bank is not trading actual Bitcoins or any cryptocurrency, nor is it ready to for now. Phil Zoe, NTD News.
Citigroup is also thinking about launching its own cryptocurrency services. It says trading, custody, even financing are all on the table. But the Bank of England's governor is again warning against cryptocurrencies. He says investors should be prepared to lose all their money. NTD's Patrick Hayden takes a look.
The Bank of England Governor Andrew Bailey on Thursday again warned against buying cryptocurrencies.
So I'm going to say this very bluntly again, buy them only if you're prepared to lose all your money.
Cryptocurrencies are booming this year with Bitcoin up more than 90%.
I'm afraid, they have no intrinsic value. Now, it doesn't mean to say people don't put value on them because they can have extrinsic value, but they have no intrinsic value.
Proponents of Bitcoin argue that it can act as a hedge against inflation as central banks increase money supply to ease battered pandemic-hit economies. But skeptics say it's a bubble waiting to burst. Patrick Hayden, NTD News, London.
And Australia is rethinking a 99-year lease to a Chinese firm, citing security concerns. The company's paid to use Darwin Port on Australia's north coast for years. It's the closest to Asia and of great strategic importance. NTD's Wei Hui Shu has more.
Australia is reviewing the 99-year lease of Darwin Port to a Chinese firm out of national security reasons. Darwin Port is for both commercial and military use, and China's Landbridge Group won a bid in 2015 to operate it. According to media reports, Landbridge Group has close ties to the Chinese Communist regime. Australian Prime Minister Scott Morrison responded last week saying he would act if defense officials raised national security concerns. The result of the review is not clear yet, but the strategic importance of Darwin Port is obvious. It's the most crucial port on Australia's north coast and the closest to Asia. Darwin Port also serves as a rotational defense base for the U.S. Marine Corps, and it currently hosts up to 2,500 U.S. Marines. It also stores fuel supply for U.S. Navy ships at sea. The U.S. voiced concerns when Australia signed the lease with China's Landbridge Group in 2015. Reporting by Xu Huanwei, NTD News.
And still to come, Crocs is giving away thousands of pairs of shoes to frontline workers. It's to mark National Nurses Week. And a massive 3D model maps one of the world's biggest cities. It shows everything, including sea levels, railroad lines, and how could it help with urban planning? That and more after this short break.
Here you go.
Thank you.
Thank you.
In uncertain times, people rush to buy physical gold and silver. It's strong, solid, dependable. Now is the time to buy from the trusted source, Westminster Mint. With 20 years experience, an A+ BBB rating, and our unconditional 30-day money-back guarantee, Westminster Mint is America's dealer. The best value in gold coins today is this newly released 2021 $50 American Gold Eagle coin, certified a perfect 70 by the world's largest grading service, NGC. At 1 full ounce of pure gold, this 2021 Gold Eagle is the biggest and most beautiful coin struck for circulation. Get yours now while you can at our exclusive low price. Call right now and get the Gold Eagle's perfect companion, the 2021 Silver Eagle, absolutely free with your purchase. With free shipping and a 30-day money-back guarantee, Westminster Mint is America's dealer. Hurry for your early release 2021 American Gold Eagle and free Silver Eagle before they're gone. Call now.
Crocs is donating 50,000 pairs of shoes to healthcare workers. It says it'll give away 10,000 a day, Monday through Friday of next week. Healthcare workers can request a pair starting noon Monday. The Crocs at Work line features several slip-resistant options designed for nurses. Last year, Crocs says it donated more than 860,000 pairs of shoes to frontline workers. And Krispy Kreme is bringing back its graduate dozen next week. It's a free dozen donuts to graduating high school and college seniors. You just have to show up at a participating Krispy Kreme on May 13th with Class of 2021 graduate swag like t-shirt. And people who are not graduating seniors can buy it as a gift Monday through Sunday. The graduate dozen was introduced last year as a consolation because students, of course, couldn't have their traditional graduation ceremonies during the pandemic. And after an overwhelming response, Krispy Kreme decided to bring it back. And buildings in Tokyo are frequently overhauled to meet their ever-changing earthquake and typhoon requirements. Now, an urban landscape developer is monitoring the expansion of the city by pairing a 3D model with projection mapping. NTD's Jasmina Davis has the story.
This is a 1 to 1,000 scale miniature model of Tokyo, one of the world's biggest capital cities. Late last month, the Urban Lab project at Tokyo's Mori building updated its 3D projection mapping of the city to better prevent disasters and do urban planning. Launched in 2019, the project covers an impressive 89 square miles and 13 of Tokyo's 23 districts. It displays everything from sea levels to population densities. The project manager says this model aims to help researchers and private developers think about the city.
It's not just experts who are involved with the city. There are also people who work, live, or run businesses. There are many types of people. It's important that they can all talk about things with the same words and the same perspective. That's why it's important to visualize the information and make it easy to understand for everyone.
Visitors can spot landmark buildings of Tokyo in precise 3D details, including the famous Tokyo Tower and rows upon rows of apartment blocks. According to an employee from Mori Building's Urban Planning and Development Division, the project visualizes the rapid expansion of Tokyo in compelling ways.
Of course, Tokyo has its own uniqueness, but the speed of the city's renewal is still fascinating to me, even after working on such projects for 20 years.
The exhibit is updating each year to keep track of the loss of old buildings and the addition of new ones. The latest update this year includes a residential skyscraper that was recently built anew.
That's the latest business updates for this week. You can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern, last one of the week. For NTD Business, that's all for this week. Thanks so much for watching. Have a great weekend. We'll see you Monday.
We have a new channel. Subscribe to us on YouTube at NTD News. Get the highlights of our news broadcast and the most important headlines that we curate especially for you.
Don't miss out on important news. Our videos are being deleted. So if you don't want to be cut off from honest news, take a moment to sign up for our newsletter at newsletter.ntd.com so you don't lose access to NTD. Go to newsletter.ntd.com to sign up for our evening newsletter.